China is always considered the mover and shaker of the commodities market, particularly metals. In the global nickel market, it has joined hands with Indonesia, trying to create a sort of duopoly. But Jakarta too is trying to chalk out a path on its own. Namaskar. In this episode, we will look at this interesting development in the global nickel market. Nickel is mainly used in producing stainless steel and other alloys. It can be found in food preparation equipment, mobile phones, medical equipment, transport, buildings, and power generation. The biggest nickel producers are Indonesia, the Philippines, Russia, New Caledonia, Australia, Canada, Brazil, China, and Cuba. Currently, nickel prices in the futures market are rolling above $16,500 a ton, a 5-month high. However, they dropped to near 4-year lows in late 2024. Prices are on the path to recovery as Indonesia is curbing the oversupply of the metal. Jakarta is considering cutting nickel mining quotas by 120 million tons this year. It will likely reduce global supply by 35% from current levels. But there is no panic yet in the market, as indications are that nickel may remain oversupplied. Stocks in London Metal Exchange warehouses are more than double from a year ago at nearly 200,000 tons. This is due to a surge in Chinese smelting projects in Indonesia, which curbed export of nickel ores in 2020. Indonesia was the host of 44 nickel smelting operations as of September 2024, compared with just 4 in 2020. According to the Australian Office of the Chief Economist, or AOCE, recent reports suggest that Indonesian producers are now seeking partnerships with new investors to reduce their share of Chinese ownership and improve eligibility for the US Inflation Reduction Act credits. Additional investment in Indonesian nickel may come at the expense of investment in countries outside of China and Indonesia. However, AOCE says Indonesia is on the path to represent around 44% of the global market share by the end of 2028. In terms of refined nickel production, specifically, Indonesia and China are expected to account for 75% of the global refined nickel supply by 2026. This is leading to the geographical concentration of global nickel output. It will remain a key trend to 2028. Geographical concentration will continue to be a major feature of the global nickel market in the coming years, raising the risk of supply chain vulnerabilities, says the AOCE. But the Australian Chief Economist's Office sees a contrast in nickel usage between Indonesia and China. This is indicative of Indonesia's continued emergence as the world's second largest producer of stainless steel. This means Indonesia is engaged in increased competition with Chinese stainless steel producers. ING Think, the economic and financial analysis wing of Dutch multinational financial services firm ING, says supply growth will remain strong and ample to meet the 5% demand growth projected this year. The AOCE projects a price fall driven by the continued global oversupply of nickel combined with weakening demand. These conditions are expected to keep prices below $18,000 a ton until 2028, despite a 1.5% demand growth. That's good for consumers. Keep smiling and be happy. Until we meet in the next episode, this is Subramani Mangambu signing off. Good luck.